All countries have unique tax systems by which they regulate trade in goods and services. ERPAG allows you to set taxes according to your preferences, for example according to tax systems in different countries. There are several tax levels in ERPAG, and you can combine them in order to define different tax rates for different locations. There are 3 tax levels: tax category, tax location and tax jurisdiction. By combing these 3 levels, you can define tax rates for different locations. Taxes are located in the menu Sales, then Taxes. The first level is tax category. All countries have unique tax systems by which they regulate trade in goods and services. ERPAG allows you to set taxes and tax rates according to needs of your business. Here you will find the most common tax rates, such as standard, lower or combined rate. The percentage rate varies depending on the state. You can open as many groups as you have different kinds of rate. In our example, we use default category, that is 21% of standard rate, then 21% for computers, 10% for services, etc. Then, the second level is tax location. These are different locations, such as city, state, country, for which you can define different taxes. For example, you can define taxes according to their sales locations, or define standard rates for places regulated by value-added tax systems. In the sales tax system, you can define taxes by locations, such as cities, states, countries, etc. For example, when you are selling goods in the domestic market you will have taxes of 20%, whereas when you are selling goods to foreign market you will not pay taxes. In VAT system, as you can see, we have domestic and export locations. In the last level, tax jurisdiction represents the kind of tax that we using in the VAT system, such as standard and lower rate. This is an area subject to its own distinct tax regulations, such as a municipality, city, county, or country. If we want to add a new category, you will click on Add New button, enter description for this category, for example cell phones. In the domestic market, we have 15% of tax for them, so we will enter that in standard rate. Click Save. Now let's go to product list and enter a new one with this tax category. You may add new tax category directly from product and services by clicking the Add New button. Now, we will sell this product and see what rate do we have in our invoice. We will use a domestic partner. Tax location is domestic, and we select this product. As you can see, VAT is 15%. Let's print this document. Here you can see VAT recapitulation. In sales tax will be sales tax recapitulation. Journal voucher will show VAT 2 on the specific account. You see? But what if our partner is not the domestic customer, and we shouldn't have VAT on this invoice? Just go back to Invoice and choose Export Tax Location, and there is no VAT anymore. Let's see a report and journal voucher. If you noticed, we can set tax for a product, but we can set tax for partners too. To do that, go to Sales, click Customer, activate some customer or make the new one by clicking Add New. In tax location select one. You will do that for suppliers too.